Scott, no surprise, the Bank of Canada left interest rates unchanged as expected, but they did say that the impacts of COVID-19 may have peaked. Scott, what stood out for you?
Yeah, I think people were expecting pretty much an unchanged, no changes to the policy tools, but the language is a little bit more optimistic, as you point out. COVID, the implications, or COVID has peaked, and now they're focusing on the recovery and the growth and employment. And so I think that is really what the focus is. And you could slightly characterize this as a little bit more optimistic. When they were looking at a range of scenarios in April, this scenario in terms of growth change was probably on the more optimistic of the pessimistic scenarios that they had put out there.
When we look at the statement, the Bank of Canada also suggested that the Canadian economy may have avoided the worst case scenario when it comes to the impact of COVID-19. Where do you see the Canadian economy heading in the second half of this year?
Yeah, when you step back and see how the markets have recovered, we certainly a lot of people are scratching their heads, whether it's equities, fixed income, currencies, and we've definitely seen the global economy start to reopen here, and we're seeing slightly more optimistic, developments. From a very narrow economic point of view, there's certainly been a substantial human cost to all of this. So I think you're seeing evidence in the markets of a recovery, and continues to play out. We're seeing a cyclical recovery here across a lot of asset classes. Obviously, that plays into the Canadian economy. If we get a bit of a cyclical lift, you're seeing it in other sort of emerging market, commodity-based countries out there: Australia, New Zealand, Norway, Sweden, all evidence of some a cyclical recovery. And so that plays into Canada's recovery here, and certainly being tied to the U.S. economy, as it recovers, and we see more evidence of opening up here, that will play into support. But there's still a tremendous amount of uncertainty, and I think the Bank of Canada emphasized that today.
And of course, Tim Macklem officially takes over as Bank of Canada governor. Do you expect any changes in Bank of Canada policy going forward?
Yeah, no, Tiff took over. Well, he didn't take over for this meeting. He was an observer at this meeting. And so going forward, it takes a little while before a governor sets his tone. It took a little while before Polos, tried to become, anecdotal with his communication and describe monetary policy in a very familiar way. And that described Polos. And it'll take a little while for Tiff to get there, but it's a very collegial, it's a group decision-making process. So it'll take a little while before we really see the imprint of Tiff Macklem, in the markets at least.
And we just have a few minutes, but I wanted to ask you about the Canadian dollar. Where do you see the loonie going over the next little while?
Yeah, good question. I mean, the policy reaction, the impact, the biggest impact had at the end of March. And from the end of March until now, you've seen the US dollar on a broad aggregate basis decline. So I think more recently you've seen Canadian dollar outperform against the US dollar, but certainly it's playing a little bit of a catch up to, a lot of that commodity or cyclical story I talked about, whether it's, the Australian dollar, the New Zealand dollar, Norway, emerging market currency. So Canada's playing a little bit of a pickup. And certainly as we continue to see this recovery play out, it leans into the strength in the Canadian dollar. But this is a rally that's had a lot of legs, at least in the Canadian dollar strength. So I think the pace of gain is slowing a bit here. But net, I think you're going to continue to see the Canadian dollar rally a little bit more as we continue to see the global economy recover a bit more here.
Scott, thank you very much for your time.
My pleasure. Thank you.